Hey everyone, welcome back to Corporate Decoder. Today we're diving into a document from BlackRock funds, and it's not just any document, it looks like a financial peekaboo. But is there anything valuable hiding behind it? Let's find out. Before we get started, if you appreciate straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we talk about this stuff all the time. Come on over and join us. This filing is a shareholder report for the Circle Reserve Fund, a money market fund managed by BlackRock. It's like an annual checkup, giving everyone the key stats and financial results for the year. What's important is the period it covers from May of last year to April of this year. So let's see what BlackRock and Circle Reserve Fund has been up to. Let's explore what this report shows us about where the fund has been and where it might be heading. First things first, how much does this fund actually cost? For every $10,000 invested in institutional shares, it's costing about $9. That's a percentage of zero low. It basically means nothing, but take nothing with a grain of salt. This shows that it is a very efficient fund. The fund boasts over $54 billion in net assets. We can also see that there are just 27 portfolio holdings. The fund is huge, but that's not that many holdings. Diversification is one of the things you should look for if you are going to invest in an instrument, so this figure might raise an eyebrow. The current 7-day yield is about 4.28%. This is what the fund is earning over a week as of the end of April. That 4.28% can differ from another yield referred to as SEC's yield because the SEC one excludes capital gains from distribution. Where is this fund actually investing? A big chunk, 58%, is in repurchase agreements. We'll talk about those in more detail later. Just think of it like short-term lending, basically. Another 47% is in US Treasury obligations. So overall, very safe bets. The liabilities exceed other assets. So it skegs 5%. Moving on, we see that the fund has a code of ethics for its top financial officers. It's like a conduct code, making sure everyone's playing by the rules. Next up, the Board of Trustees has people with money smarts on its audit committee, people with experience in this type of stuff. The filing points out names such as Neil A. Cotty, Henry R. Kaiser, and Kenneth L. Urish. These experts are independent, so that's good. How much is the fund spending on its accountants? According to the table, the audit fees for this year was about $26,650 last year. It's a small price to pay to make sure everything is according to the rules. These fees were covered by Deloitte & Touche. Everything is according to the rules. These fees were covered by Deloitte & Touche, Cell, aka D&T. There are also fees to be approved for audit-related services for operations of the fund. The fees tallied up to $2,149,000 for both the last year and the previous financial year, but were paid to BlackRock, which might not be a bad idea. These amounts were aggregate and not allocated on a per-fund basis. The audit committee also has rules for approving services ahead of time. This includes audit-related and tax compliance services. Now let's look at what and how the fund is investing. This means examining the schedule of investments. As of April of this year, the fund has a lot of investments in US Treasury bills and obligations. Let's focus on just one US Treasury bill with 4.26% due in early May. The par amount is over $2.8 billion in total. The US Treasury obligations add up to $25,481 in 680 Ontarian 81 ton 608 and 1 higher $1 mints are even higher at $56,920 6 tad 18 early May. The par amount is over $2.8 billion in total. The US Treasury obligations add up to $25,481 60 80,000 269. The total investments are even higher at $56,920 60 80,000 2060 80. The fund also uses repurchase agreements, which is like a short-term loan. Let's look at the repurchase agreements. They are secured with US Treasury obligations, offering some security. They've got agreements with many firms such as Barclays Capital Inc. and BNP Paribas. According to the filing, the fund uses varied inputs to determine the value of the financial instruments. The fund uses a 3-level system where level 1 has the highest value, unadjusted prices for assets or liabilities. Level 2 has inputs that are more than just quoted prices. Level 3 are inputs that are not observable or that required a very close look. Level 2 had the highest input for asset investment in short-term securities, tallied at over $56 billion. How have the fund's assets changed? It looks like the change in assets has improved since last year. The net assets tallies at over 54 billions compared to last year's 29 billions. Specifically, net investment income jumped from about 1.2 billion last year to 1.7 billion this year. The distributions to shareholders obviously increased, but still at a negligible rate. A quick look at the highlights shows a positive change from the fiscal period of November of 2022 to now, with fractional but very relevant changes to both net investment income, net realized gain loss, and net asset value. This part goes into the background. It explains that the fund is managed by BlackRock, operating as a government money market fund under something called Rule 2A7. The fund is considered a single operating segment, meaning it has one investment strategy. The fund values its investments using the amortized cost method, which is close to market value. The idea is to keep the net asset value per share at $1.0 EZ. BlackRock also provides lots of advice. The fund pays BlackRock a monthly fee for investment advice, based as a percentage of the value of the fund's net assets. BlackRock has agreed to limit all expenses and has also agreed not to reduce or cancel this agreement through June next year. The fund aims to be tax compliant as a regulated investment company, and also aims to give all its taxable income to its shareholders. Like all investments, there are risks involved in the fund. If a war breaks out, the economy does good or bad. This affects the fund greatly, and these external factors also affect investment values. There's also counterparty credit risk. What happens if someone doesn't pay back what they owe? Circle, who holds shares of the fund, may request large redemptions. This may force the fund to sell what it holds and will negatively impact the fund. This details how many shares have been bought and sold. Finally, there aren't any important events that happened right after the period, so it doesn't require adjustments or more details on what we already have. The independent auditor, Deloitte & Touche, gives its opinion. They think the financial statements are fair and in line with accounting rules. So what's my take on this report? It appears to me that Circle Reserve Fund is relatively stable. It is mainly in US Treasury obligations, which can be good but can mean little return. And there's some risk coming from large redemptions given that it holds Circle's assets. Overall, in terms of safety, I'd give it a 7.5 out of 10. How would you rate the fund? Let me know in the comments below. If you found this breakdown helpful, don't forget to hit that like button and subscribe for more deep dives into the world of finance. And be sure to come join our community in the Discord server linked in the description below. Thanks for tuning in, and I'll see you in the next video.